Welcome, and I hope that you are having a fantastic day. Today, we're going to talk about cryptocurrency news. We're going to look at crypto and taxes. We're going to look at the BAKKT exchange in Congress, and we're going to talk about Bitcoin to the moon. So, I need you to know I'm not a financial advisor. This is not financial advice. This is my opinion. I'm not smarter than you. You're smarter than you realize. Do not trust what I say. Do your own research. Very important. Always do your own research. That's why I include the links to the articles I'm about to show you, because I'm only going to cover them very briefly. So the first thing we want to talk about is crypto tax reporting failures can be expensive, even criminal. The Internal Revenue Service is aware that millions of cryptocurrency transactions may still remain unreported. Taxpayers may think that they will not be caught, and many Coinbase users may have thought their information will be protected until the John Doe summons proved otherwise. The best way to avoid penalties is to disclose and report as accurately as you can, showing that you do not have a willful intent to avoid taxes. Otherwise, you could face large penalties and even potential criminal investigation. Anyone convicted of tax evasion, for example, may face up to 5 years in prison and a fine that could be as high as $250,000. Taxpayers may think that the IRS could penalize them, but might assume that they do not need to worry about any criminal implications. So just be aware that if you're buying and selling cryptocurrencies, you do have a tax obligation. And you need to make sure that you take care of that tax obligation when it comes. Now, I use a service to help me with my U.S. taxes. I'll leave a link to that service below in the comments just below this article, because I'm also going to provide you with a link to the rest of this, so that if you want to read the rest of this article, you certainly can. And hopefully you are aware of, the liability you can occur if you don't report at all. So, the SEC highlights 2020 crypto priorities for its examination office. In the new document, the agency emphasized how the emerging digital asset market presents risks to retail investors who do not necessarily understand how these assets differ from traditional ones. Due to those risks, OCIE will continue to identify and examine SEC-registered market participants engaged in this space. Examination will assess the following: investment suitability, portfolio management and trading practices, safety of clients' funds and assets, pricing and valuation, effective compliance programs and controls, and supervision of employee outside business activities, the report noted. So, the bottom line to this is the SEC is going to get more and more involved in the cryptocurrency space, and they're going to be looking closer and closer at different exchanges. The SEC has already, in the past several years, gone after or communicated with a number of cryptocurrency exchanges. For example, in 2019, Binance announced that they would stop serving U.S. customers and that they would open a brand new Binance United States exchange to serve U.S. customers. Now, the brand new Binance US exchange has been opened, but the reason why they did that is because of the SEC coming to them and trying to enforce the things that are listed here, like investment suitability, portfolio management, safety of clients' funds, etc., etc. And so we're going to see in the future the SEC getting more and more serious about cracking down on all of these different points. Some of them could be good for the public because there's been many, many instances. Even in 2019, there was about 8 or 10 exchanges that were hacked into, including Binance, which is one of the largest exchanges in the world for cryptocurrencies. Now, in some of those instances, the public or the users actually lost money. In the case of the Binance hack, Binance covered the loss so that none of their customers were actually harmed in it. But, you just That's one of the reasons why I always recommend when it comes to cryptocurrency trading, never ever keep your currency, your crypto, on an exchange. Always withdraw your cryptocurrency and keep it in your own wallet, preferably a hardware wallet such as a Trezor, a Ledger, or a KeepKey. If you have any questions about that, I will include a link to a previous video I did called Not Your Keys, Not Your Crypto. And in that video, we dive deep into the whole conversation about how to protect your cryptocurrency and what's been happening with the different exchanges and the hacks that happened on those exchanges throughout 2019. So if you're not familiar with hardware wallets, that's definitely a video to be watched. Now, in this article, Bitcoin traders feel fever of halvening months ahead of the date. Yes, here it is. So this article goes through a number of different quotes of people quoting what they think about the halvening. I didn't highlight hardly any of these quotes because most of them, they're basically saying that the halvening has already been priced into today's price of the price of Bitcoin. And their reasoning behind that is because the people in the market already are aware of that. And while that's true that the people in the market are already aware, many of them, it's not true that 100% of the people that own cryptocurrencies are aware of the Bitcoin halvening. It's true that many of them are, but I disagree with the concept that it's already priced in, because there is an actual effect on the halvening. So before I get into that, and that actual effect of the halvening, I think is also part of what helps drive the price of Bitcoin to go up significantly. So before I get into that, let's look at this quote. Many market participants have been asking the question, is the Bitcoin halvening priced in? That is the wrong way to frame it. A small single-digit percentage of the world currently owns Bitcoin. For those that currently own Bitcoin, a large portion of them understand that Bitcoin's newly issued supply is cut in half every 4 years. This is likely a significant reason why they own it, because of Bitcoin's provable scarcity. For the many billions of people around the world that do not own Bitcoin, few understand this provable scarcity's characteristic. So for those billions, it cannot be priced in. To the extent those billions of people discover Bitcoin in the future and decide to buy some, there will be less new available supply to satisfy that increased demand to purchase Bitcoin. So I should have explained before I got into that paragraph exactly what is the halvening. So I'm going to take a moment and kind of describe that. Bitcoin, every time you transfer Bitcoin from one address to another address, that transaction is added to a group of transactions, and that group of transaction is called a block. And once that block has been approved and validated, then that block gets added in a permanent and unchangeable way to the blockchain, which contains all of those blocks of transactions from the first day that Bitcoin existed. And so it becomes part of the blockchain, which is why they always talk about blockchain in regards to cryptocurrency. Now, how does those blocks get validated and then added to the blockchain? Well, that's where Bitcoin miners come in. Bitcoin miners do the validation to make sure that the cryptocurrency that's supposed to be in address A actually is in address A, and that address A isn't double spending or spending more than they have, et cetera, et cetera. So they validate the validity of that actual cryptocurrency at that specific address, and then they handle moving the cryptocurrency from that address to the new address, address B. And in the process, the miners are validating the blockchain, validating that specific block, and then adding it to the blockchain, and they get paid in rewards. Now, those rewards are changing. Today, those rewards are 12.5 Bitcoins per block, and in the future, and the future is very, very soon, we're talking sometime around May of 2020, so in just a few months, that will be cut in half. And this happens every 4 years. Every 4 years, the reward to the miners for doing the mining activities is cut in half. And so this time we're going from 12.5 down to 6.25. And then the next time they're going to go down to 625. And so every time it happens, they make less and less money per block that gets added to the blockchain. As a result, miners, in order to stay in business, they take those mining rewards and they sell them on the blockchain in order to pay their people, pay rent, pay for electricity, et cetera, to pay all their bills, because their main revenue source, their main source of income is the block rewards. Also, when you transfer Bitcoin from point A to point B, there is a fee that's charged for that transfer, and that fee also goes to the miners. And so those fees and the reward for the block is divided among however many different miners were involved in solving the cryptographic puzzles that are required in order to solve it, and also for doing the work of validating the transactions and then adding the transactions to the actual blockchain and making those transactions immutable or unchangeable so that somebody couldn't fraudulently remove stuff from your address and put it into their address, which would be a fraudulent thing to do. Anyway, all of that is going to be cut in half, and a big reason why the price of Bitcoin goes up is because once that is cut in half, then the miners have less rewards that they're actually selling on the blockchain, and because there's fewer cryptocurrency on the sell side of the order sheets, that forces the price up because there's less Bitcoin for sale, and so the people that are buying it have to pay a higher price because there just is less out there for them to actually buy. And so this affects the supply and demand of Bitcoin. It increases the scarcity of Bitcoin, et cetera, et cetera. Plus, when you also look at everything that's been in the works for the last several years, there's lots and lots of different things, including things like BAKKT coming out with their own retail app, and Microsoft and Starbucks being involved in the BAKKT retail app, and all kinds of different things that are going to help increase the number of people that are purchasing Bitcoin. And as that number increases and there's less and less Bitcoin available for them to purchase, the end result is Bitcoin becomes more and more expensive for people to buy it. And so just because of the actual results of the halvening, I don't think you can fully price it in today. I think those results will still have an effect in the future weeks and months after the halvening in May 2020. So anyway, as always, this is my opinion. This is not financial advice, and this is not fact. It's not fact until it's already happened. And so we have months yet to determine whether or not that will happen, because we're talking about something that the halvening will happen, but the effect of the halvening will occur over the next 6 months, 12 months, 18 months. If you look at the price of Bitcoin in comparison to the halvenings, the new all-time highs normally happen somewhere around 12 to 18 months after the halvening occurs, because Bitcoin gets into this parabolic increase after the halvening. And so I think we'll be in for a big run, but time will tell how accurate my expectations are, because they're definitely not always right. I've had many things I expected Bitcoin to do in 2019 and 2018 that never came to fruition. So hopefully some of what I'm talking about actually happens. Bitcoin's price will be golden in 2020 thanks to limited supply, increasing use, and this is a Bloomberg report. Bloomberg's 2020 Crypto Outlook report published Monday predicts Bitcoin's price could move to the top of its 2019 range and retest the $14,000 high at a time when a weak dollar and stock market volatility continue and geopolitical tensions increase. Bitcoin's initial reaction to the January 3rd U.S. airstrike that killed one of Iran's most powerful generals was a good test of our premise that this is the firstborn crypto is maturing toward a digital version of gold, reads the report. Bitcoin jumped to a 7-week high Wednesday as gold rallied to 1,600 for the first time since 2013. Bitcoin has long since been seen as digital gold, in part because it's a limited asset that cannot be easily increased to meet changing demand, much like the yellow metal. The halvening event expected later this year will reduce block rewards from 12.5 to 6.25 BTC, further adding supply pressures that should demand continue to grow. Bitcoin supply is projected to grow by about 2.5% in 2020, which would be an all-time low. That's partly due to the halvening of the block reward from 12.5 to 6.25 BTC. Supply in 2021 could fall well below the 2% analysts say. And so we're getting to a place where the new Bitcoin is only about 2.5% and will become 2% of the total supply of Bitcoin because of the halvening and because it's not possible to create any additional Bitcoin because of the way the software is written. And so this is also going to play a part in the increasing price of Bitcoin in the coming months and years. And then finally, former BAKKT CEO, new U.S. Senator Loeffler will help oversee the CFTC. And so Kelly Loeffler is going to be former BAKKT CEO, and Georgia's new Senator Kelly Loeffler will help oversee major financial regulatory and commodities futures trading commission, the CFTC. Sworn into the United States Senate on January 6th, the crypto-friendly businesswoman has joined the Senate Agriculture Committee, which oversees the CFTC. The news was first reported by farm and policy publication AgriPulse on January 6th, while the official announcement was released on January 7th, 2020. And so Kelly Loeffler and her husband own the company that owns the New York Stock Exchange. That company's ticker symbol is ICE for Intercontinental Exchange Corporation. And ICE is the owner of about 12 different exchanges and 8 different clearinghouses around the world. In fact, one of the clearinghouses that ICE owns is the one that sets all of the oil barrel prices on a global basis. And so ICE is an extremely powerful company doing $9 billion a year. And Kelly and her husband are the people that actually run and control ICE, basically run and control the New York Stock Exchange. And she was the person that was the CEO of the BAKKT Exchange, which is the New York Stock Exchange's joint venture with Microsoft and Starbucks, where they created a cryptocurrency exchange. And the BAKKT Exchange went live on September 24th. And so it was interesting to see her step down so soon after the company had gone live with their first exchange. But for her to step down in order to become a United States Senator is becoming more and more clear, especially when she's going to be involved with the Commodity Futures Trading Commission, which has a significant control or a significant effect over the BAKKT exchange. Things are looking very interesting, and with her being a senator, she could have a very positive effect on the cryptocurrency industry as a whole, as well as what happens with the BAKKT exchange. So some people think that that's a negative, but ultimately, if the more the U.S. government is supportive of cryptocurrency, the easier it will be for cryptocurrency to thrive in the United States. And so I know that, from her perspective, Kelly Loeffler's background is ICE and BAKKT, and she'll have a priority to those two organizations. So some of her decisions will, benefit ICE and BAKKT, but some of them will benefit cryptocurrency at large. I think the overall, it will be a positive thing. So anyway, that's all I got for you for today. How can I be of service to you? If you have any questions, please leave them in the comments below. In the meantime, like, subscribe, and hodl. And I hope that you have a fantastic day.